Welcome back to another roundtable. My name is Adam. With me, I have Rusmin again.
Hello.
And Victor.
Hi, everyone.
Thank you so much for joining us. And today we're going to talk about recession. Okay, so
Every Tom, Dick, and Harry that I met all talking about recession.
So there's the news is that the US, the leading economy in the world, has had 2 quarters of negative GDP growth.
Yep.
So that counts as a technical recession.
Yep.
So the US is in a recession. We feel like we're in a recession here as well. Inflation is going up, interest rates are going up. It feels like another crisis all over again.
Yes,
one from the other.
Yeah.
So we're going to discuss this recession and how it's going to affect your stock portfolio and what you should do in times like this. All right. So why don't we do a quick summary of what's happening with the US recession and all that stuff?
Yeah. Okay. So US GDP actually fell to by 0.9% in the second quarter of 2022, right? And there has been a lot of recession fear because of that, right? But if you look at the unemployment rate, I think we are almost back to the pre-COVID level for the US economy, right? At 3.6%, right? And on the other hand, we have inflation that the world needs to fight. Okay, so which is especially United States, and you have prices like gasoline, at all-time high, and of course that inflation is what is happening right now is that people they are getting their job, they have their pay and all that, but the cost of living has gone up, creeping up way faster than their wages increment. Right, and that leads to, of course, people will ask for more wages, and that will become to a heavy toll for businesses because businesses will incur more expenses. And as they incur more costs, and of course they raise the prices, and that's where it leads to
more
higher
inflation. So you want to avoid that scenario again, where it's called, I think, a wage inflation spiral or something like that. So they want to avoid that as well. And I think I remember reading that, are we in a stagflation? Is the US in a stagflation? And the answer is no, I think, because you need 3 things for stagflation, which is negative growth, inflation, and unemployment. But unemployment is healthy in the US right now. So people still have their jobs, which means they can spend. But how would you feel as an individual, in a situation like this?
Yeah, I think people are more concerned, or I think they are more conscious with their spending right now, right? So pre-COVID, I think at that point of time, I think a lot of people are just, I can feel, even I also just spending without thinking all this, right? But when now a lot of people are having housing loans or your job, higher cost inflation and all this, higher food costs and everything, right? So with your higher, as an example, housing loans with the interest rate going up, right? In the past, you got this extra money that you can spend on buying certain things that you want, right? But now you have to take that money and pay up your housing loan, right? And on top of that, you hear that your company is freezing headcounts, or they are firing people, cutting off the jobs and all this, and you're going to get very, very worried, and you're not going to spend freely as you want, right? You'll be more conscious of your spending. So I think now that's the sentiment in the ground right now.
So that's how you feel. Even here in Singapore, I was having chicken rice the other day. I added some extra chicken. It was $8. $8 for chicken rice.
That's a good funny one.
And that's a true story. So and of course with the Malaysian chicken ban and all that. So my plate of chicken rice with extra chicken cost me $8.
Who ate chicken rice paid $8?
I did.
Because of inflation.
So, and of course there was a supply chain and all that issue as well. We're going to talk about that as well. So basically prices are going up, and how is this all going to affect businesses at the end of the day at this point in time? If prices, there's inflation and all that stuff.
So of course, company with pricing power, they will typically be able to raise prices and then pass it down to the consumer, right? But that may lead to lower volume for the business itself. But a lot of companies that I think if you look at as they report the quarterly earnings, I think they are reporting a higher wages, right? Higher running expenses and higher logistic costs because of the supply chain issue. And a lot of them, I think a few of them have in fact suffer a margin compression because in a time like this. Okay, that's why I think the market over the last few months have actually sold down due to that fact. Okay, but as more companies report more quarterly result, I think about more than 56% of the company in the S&P 500 have actually reported actual result, and out of which surprisingly 3 out of 4 companies have actually reported above the EPS estimates the analysts were guessing.
All right. So they beat the
estimates, and that actually kind of like leads to higher stock prices that we've seen.
Okay.
The rally. Okay. The short rally. We do not know whether this is going to be a short-lived thing or it's going to be a permanent rally, right?
Yeah.
So, but it seems that at this stage, the recession is still lingering around. I think people are scared. I mean, you have seen businesses are forecasting a lower growth, lower profit, and of course, the hiring also has been frozen for some company, and some companies, of course, like Oracle, they have cut down their hiring, right? The staff that they have, right?
Yeah. So I would put it all together. So basically, consumers are more careful with their spending. Discretionary spending is down. So basically, if there's less spending, companies' profits or revenues will come down as well.
Yes.
Right. But then we've seen that, recently the Fed basically put the interest rate hike. It's another 75 basis points. And the market went up. Yeah. So if we take a look at the S&P 500, I mean, right now, the US is in technical recession. We hear all these news. But the market has rebounded somewhat from its bottom. Right?
About 13%.
Yeah. So some people will be looking at this and what's happening, and everything looks like you hear all the bad news, but the market is picking up. Why is that so?
I think the first thing you as an investor, you need to understand that the stock market is not the economy.
Okay.
Right. Because a lot of times when we look at the economy, there's a lot of expectation by the investors, right? So every time when we expect or maybe we see the economy recession, the market already rebound, right? So the market always goes because of the expectation, because a lot of the indicator that we see, right, is all lagging.
And the market is forward-looking.
Yes, the market is forward-looking, right? So I have a table over here that from Forbes, right? They talk about stock market returns during recession, right? The market typically bottom out and rebound months before the end of the recession, right? Because again, when most people expect it, they already sell out, they already price in the thing in the stock market. By the time the recession happen, some new indicator happen, say that there's going to be a good data, these things, inflation coming down, and the next moment, people are buying up when the recession is happening, right? So I think we need to be very clear that, as I say again, stock market is not the economy.
I think I can point a similar lesson that I learned, where I think during the height of the pandemic, people were literally dying, and the stock market just went up. And it was like, what's happening? It feels like the end of the world. But the stock market just kept going up, and it's like that was like a clear lesson for me that the stock market is not the economy in a sense, like the real life, what's happening down there. So what you're saying is that the recession that we're feeling now has already been priced in months ago by the stock market. That's why it's been coming down the last few months.
The stock market has been coming down for the last few months, but now it's going up.
And now it's going up because now the market is looking maybe a quarter or two into the future. And they're expecting that maybe this recession that we're feeling right now is going to improve.
In fact, the whole market is actually feeling the same thing with regards to inflation. So if you look at the inflation, I think we have seen at all-time high, right? 9.1% in the US for the US economy itself. I think that has slowly been coming down, because you look at the wheat prices has come down off the peak from the May, I think 40%. Oil prices has also come down, but we don't know whether there will be continued increment from there. And lumber prices also has come down. And supply chain issue also have been slowly ironing out. Okay, so what happened back then, of course, in 2020, when the world went into lockdown, no planes were flying, no cars were out on the street, so the demand for oil actually dropped significantly. So I think there were a few millions of barrels of oil were actually being removed from the market permanently, right? And because of that, as the lockdown suddenly ease off and people come back, resume their normal life, suddenly the demand for oil prices come back, and that's what leads to the oil prices coming in, right? So, but then to recover, put back into that supply of the oil, production of oil, it takes time, it takes years. It's almost like your semicon, right? You need to buy the land, you need to get a talent in, you need to build the whole plant. That takes you at least 2 to 3 years, right? So the supply chain issue takes some time, but then the demand, it's almost like a switch. Suddenly it all come back.
It's instant, right?
An instant, and because of too much demand, lack of supply, that leads to your inflation.
And that's not just for oil; it's basically for everything. It's happened because the pandemic basically shut down so many industries. And the supply chains had to basically downsize. And then when everything was thrown off and we're free, we're free again. The supply chains take time to build up. And that's why there's this demand supply lag.
It's kind of repeat of during the World War II, one that I read where 1946. I think the inflation was at all-time high at about 18.1%. In the US, as compared to now, about half, right? So people are worried about that because at that time, what happened during the World War II was that US government actually encouraged businesses or factories to actually manufacture military equipment,
for the war
tanks.
Effort, right?
Instead of manufacturing your cars, you go and manufacture the war tanks.
I can drive a tank in the street. Right? No.
Yeah, but then as the war over, right, and then suddenly the demand, household demands come back. People started to buy for your, washing machine, and they started to want to buy a nicer car and stuff like that. But then the factory itself, it takes time to retrofit and then change back the production back to the consumer appliances, right? So because of that suddenly leads to a huge heavy flow of demand, and that caused inflation to comes in at that time, a double digit.
So you're drawing the parallel to today, where basically our demand has basically gone back to pre-COVID levels, maybe a little bit more than that.
Yeah.
But then the inflation is so high because of supply chain disruption in the past hasn't really caught, and the supply chain hasn't caught up with the demand.
And of course, Putin war has make it worse because the supply for oil has dropped as well.
All right. Yeah. So because I think supply chains will eventually, iron themselves out. And so do you think basically inflation will basically ease off?
In the way the market is kind of expecting, that's why actually there's was a rebound. Okay, so I think, and also the inflation, you must take note that it's a lagging indicator, right?
Yeah.
So I think prices has come down a lot. So I expect this inflation to either flatten out or if not come down over the next few quarters.
Yeah. So at the end of the day, I think a lot of people, they wait for the economy to have a recession and they go into the market. I think by the time you buy during that time, right? I think it's too late.
Yeah,
right?
I think that's a great thing because I think you always feel like, oh, times are great, everything's like, when economy is doing well and the prices are sky high, and then you buy then because you think things are gonna get better, and then it just turns the other way around.
I think it's again how you view things, right?
Okay.
It's all about perspective of how you see. If you want to create alpha, you have to do opposite of what most people do, right?
Yeah.
If everybody, because when you think there's recession, everybody also thinks there's recession, right? So how can you get a very good price when everybody thinks that it's the best time to buy, right? It's always at the maximum pessimism before the.
So you're saying that some people now think we're in a recession, it's gonna get worse, and they don't buy.
Yeah.
But you're the one buying.
Yeah.
And then when it basically rebounds, things are going to be you'll be sitting on some pretty good profit.
I think it's the most important is when you hear there's a lot of fear, a lot of pessimism. I think that's the best time to buy.
Okay.
Exactly happened in May, June, where the market was selling down pretty aggressively.
Yeah. Now you're up 13%, from the bottom.
Yeah. And basically now we're hearing indicators that the recession is here, but it's actually been. It's been here already, and the market has already looked at that.
Yes, correct.
So that kind of reconciles. Some people could be wondering how come all this bad news in the market is going up. Yeah. So it's because of a different time span.
Correct. I think it's the perspective of the thinking, the perspective of the investor, and also is forward looking. Right, the stock market is forward looking.
All right. So knowing this, what would you do right now with your stock portfolio?
I think the month of May, June was. Probably one of the best time to buy because US stock market was technically in the recession with more than 20% down from the peak, right? S&P bear market. So and there were at the time also when I talked to people were not only very cautious on spending, they also very cautious on investing.
Yep.
And no one talking about it, and that also giving a sign that it's time to go in.
Buy. That's the best time.
Yeah. So and there are times where next few months or a few years down the road, when you start to hear people, it's time to buy stock. That's the time where you should be selling.
Okay.
When the valuation has gone up. Yeah.
Okay.
So that's how I get my sense of indication of when to buy, when to sell.
You create alpha by going against the crowd, not with the crowd.
But obviously those are macro picture. You need to know which company to buy, right?
Yes.
And something that you need to do your
research analysis and all that. All right. So where do you feel the economy is right now? What do you feel the sentiment is with the people around you right now?
Everybody's telling me, recession coming.
So it's still time to buy. According to that, then it's still time to buy, right?
It's still time to buy, because technically Nasdaq, the index is still down 20 over %, right?
You're saying the best times were a few months,
couple of months back or last month.
Okay. So if you feel that it's still time to buy, of course you still got to look at the good companies. You don't just buy anything
yeah.
and hope that it's going to go up, because the market eventually goes up again.
Yes.
Yep.
So you still want to do your research. All right. So I think that's a pretty good summary of, if you're wondering about what's happening with the economy, everything is going into a recession and all that. Things look so uncertain with inflation, interest rates and all that. But the stock market is rebounded, like you said. How much? 13%?
But things are quite volatile. So
it's still volatile. We can predict the future.
Yeah.
We don't know what's going to happen if another crisis or pandemic or war happens. Everything is changed again. The equation changes again.
Yeah, and always have the ready cash standby for the worst, right?
So always make sure you protect your downside. So if anything happens, you're still in the game, and you're not busted out. All right. So I hope that's a pretty good summary of what's happening right now. So once again, my name is Adam. That is Rusmin. This is Victor. Thank you so much for joining us. Any questions about this, put them in the comment section and we'll answer them for you. If you like this roundtable, please hit the like button. Of course, subscribe to our roundtable. Many more roundtables coming up, and we'll see you around again.